All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com. All right, guys. So I want to walk you through this trade that I recently got into. So today is February the 22nd. It's approximately 11:59. I'm sorry, 11:52 a.m. Eastern Standard Time. And so I got into this trade on the SPX, which is what I primarily trade, the SPX, right? Primarily trade the SPX 0 DTE. Let me just pull up my pointer here. I can do some on-screen pointing. Okay, so as you can see here, the current price of SPX is at 50.63 and some change. I put on this vertical call credit spread. I sold the 50.90 and I bought the 50.95. As you can see here, I have 10 contracts and I put that trade on at so I put that trade on. Looking at my spreadsheet here because I keep track of all my trades, right? So I put that trade on at 9:41 a.m. And the reason why is because the SPX right out of the gate, as you can see here. So this here represents the price action for today, right? And so as you can see here, right out of the gate, the SPX. So yesterday's closing price was 49.81, not 49.81. And so today's opening price for the SPX was 50.38. So it jumped pretty significantly. And as a result, I decided to go on the call side because I'm always looking to trade in the direction in which the SPX is moving. And considering that it made such a large move right as the market opened, that takes a lot of energy, right, for the SPX to move that significantly. And so it behooves one to get on the call side. And as I say, use the SPX's energy against it, right? So I'm just looking to get outside of the range of the direction in which the SPX is moving. And considering that it moved strongly to the upside, I'm just looking to get beyond that reach, right? Because again, I don't want to expose myself by going on the put side to the possible reverse in direction. However, although you can see here, I decided that it also made sense to go on the put side and to look at the high for today. So the high for at the time that I put the vertical put credit spread on was 50.64. I believe it was 50.64. It's made a new high since then. So the new high right now is 50.68 for today. But at the time that I put this the put credit spread on, the high was 50.64. And so essentially I just take 50, I subtract 50 from 50.64, and that gives me a reference to where I should place my vertical put credit spread. And so that's roughly 50.14, right? And so ideally, theoretically, based upon the research that I have done, looking at a 23-year period on the SPX, getting beyond or getting right at that 50 range mark, right, from the high point to the low point, gives you a high probability trade. Now, we're not talking about any certainties here, right? Because when you're trading, it's always in terms of probability and not certainty, right? So I'm just looking to put the odds in my favor. So as you can see here, I put a vertical put credit spread on by selling the 50.15 and also by buying the 50.10 and the same number of contracts, right? And so the reason why you want to make each side, they call it the iron condor, you want to make each side equal, is because there's no additional buying power required to put on this additional spread. But the beautiful thing is you can take an additional credit. So there's no additional capital that's required, but you can take an additional credit. So right now, things are looking good. Now, I do think that I got in a bit early on the call side. If I waited just another 15 minutes, then my perspective on where to place the vertical call credit spread would have changed. My short strike, which is at 50.90 right now, would have been at 5100, and my long strike would have been at 5105 had I waited just another 15 minutes. But although I believe that I got in a bit early, it still looks like things are going well, at least right now. So if we look at the internals, the market internals, we can see here that the volume is still on the uprise, and the number of underlines that are increasing versus decreasing on the New York Stock Exchange has come down a bit, so that's okay. And then I also keep track of the tick as well. So the tick is kind of really primarily for those folks who are looking to scalp, but nonetheless, it's information that I like to have at my disposal, just so it gives me an idea of what's going to take place with the SPX. So right now, the high for the day is 50.68, and so it looks like we may continue to stay in that particular area. It looks like right now. So as a result of Nvidia's positive earnings report that came out yesterday after the market closed, and also the positive forward guidance, is really the reason why the market is up pretty significantly. So Nvidia is part of the XLK sector, which is the tech sector, right? And so that's the driving force right now behind SPX's upward move today. It was over 3%, but now it's come down a bit. So that's gonna, and the XLK sector has a major impact. In fact, it has the largest influence on how the SPX moves. So roughly 27 and 28% of a impact on how the SPX moves. So I'm gonna leave it here, guys. It looks like things are going well. I'm gonna come back and report later on this afternoon and let you guys see how the trade is going. So stay tuned. All right, guys, I'm back to give you an update. So it is 2:11. It's 11 minutes after 2 o'clock p.m. Eastern Standard Time. So as you can see here, if you recall from the first video segment, let me pull up my pointer here. Oh, screen brush. Give me a second, guys. Pull up my pointer here. So if you remember my initial position, I was at 50.90, right? My short strike was at 50.90, and my long strike was at 50.95. Well, as you can see, the SPX has been running, man. It's up over 2% for today thus far, and it's moved over 100 points. So it's a pretty large and unusual move for the SPX in one trading session. So what I did was I rolled my 50, 90, 50.95 position to the new expiration date of February the 26th. So as you can see here, it's not very far, but nonetheless, considering that this today's move has been so large, I'm expecting a slight pullback potentially. But nonetheless, I moved my position from 50.90 to 50.95 to 50.10, as you can see here, and 51.10 and 51.15. I took an extra $25 per contract, and so I'm all in this trade for $450. So that is for Monday, right? And then what I did was I put on a new position in its place, as you can see here, that expires today at 50.10 and 51. I'm sorry, I keep saying 50. At 51.10 and 51.15. So as you can see here, the expected move has decreased significantly. It's plus or minus 10. But the SPX is still running, man. It's still running. It's been in overbought territory for pretty much the entire day on the 5-minute chart. Anyway, so as you can see here, it's pretty much been in, you know, kind of overbought territory for pretty much the entire day. So the high right now for today's trading session is at 50.88, and so it's still running. It's over 100 some points, and so yeah. But I do like this position right now. This is where I should have been originally, or maybe had I waited an extra 15 minutes before I put that earlier position on, I probably would have been at 5,100, which is an okay position to be at. Although it's still would still be rather close. But nonetheless, I normally don't roll until the price of SPX gets within 10 points of my short strike. So had I been at 5,100, I would still be, holding steadfast. But nonetheless, I like this 51.10 position. And of course, my put credit spread is far out the money, so I don't have any issue with that trade. And so let's just take a look at. So as you can see here, it's starting to pull back some now, but nonetheless, it has run up pretty significantly. All right, guys, I'm back. So this is the third segment of this recording, this video. So as you can see, it's we got a little less than 15 minutes left before the market will close. So as you can see here, this new position that I put on, that I replaced I didn't replace, but I added an additional position after I rolled the initial position from 50.90 and 50.95. And so as you can see here, with less than 15 minutes to go, I'm going to walk away with the credit I received here and also the credit I received here. This should show you guys the total position. So as you can see here, the total position right now, the credit is $2,270. And so these positions right here are going to expire today. And as you can see here, I have two other positions on, well, actually three other positions on. So for February the 23rd, which is tomorrow, I have this, this is the one that I rolled from today, right? So I'm at 51.20 and 51.25. And I also put on a put credit spread. I took an additional credit and sold the 5,005 and bought the 5,000. So stick with me. And if you haven't subscribed already, subscribe to the channel and also like this video. But I'm going to take you guys through this entire trading, these entire trading positions, so you can see how I'm actually going to make money from all of these positions, in spite of the fact that this here I would consider a distressed position, because I rolled this from today to tomorrow's expiration date, which is Feb 23. And then the other position I have on is I'm at, so for Feb 26, which is Monday, I'm slightly closer. I'm at 51.10 and 51.15, but that's fine. You're going to see how I'm going to work these positions if you stick with me. So continue to watch.